Hey guys, thanks for joining. This is Lunchtime Profits with Fish Creek Capital. This is Jeff Wright. It is Monday, November 17th. Let's see what we've got today. I got a few things to go over. It is 1:30 Central Time again. I can't believe it. The mornings go by so fast. And this morning I was following up with some leads from a Facebook ad that was offering. We have a free ebook on dividend growth. If you're interested, go to fishcreekcapital.com and click on learn more, and I'd love to send it to you. And so I was following up with some Facebook leads on that. And the frustrating thing about some of the Facebook stuff is you got to kind of weed through all the fake leads before you get to the good ones or the real people. So I know y'all are out there. I know there's people that need help, that aren't satisfied with their current strategy or investments. And I'm going to find you, and I want to help you have a good plan and feel good about it and be satisfied with your plan. So that was part of what was going on this morning and kind of led into lunch. So the market, though, let's look here real quickly. It's rolled over. We were up higher. Well, we started down, and then the futures kind of turned around, and the market was kind of going back up some. And then now we've sold back off. So the Dow is down 535 points. That's over 1%. The NASDAQ is down 1.23%. It has sold off as well. The Russell's down the most at 1.4%. And Bitcoin continues to struggle. It is below like all the moving averages. So we'll see what happens there. But yeah, we've just kind of been selling off through the day here. There was some news out this weekend. Wanted to highlight as we kind of move on. Buffett, the news was he's buying Google, and that was probably not a decision he made. I think he's more hands off now, but still Berkshire Hathaway has bought Google. So that's a big deal. And it kind of makes sense. Google, it's traditionally Buffett has not been big on technology stocks. Of course, he bought Apple, and then he just has trimmed that position, and he's added Google. So Google, yeah, they have tons of cash flow, strong management, low debt. So that's a perfect Berkshire Hathaway purchase, because of course he's looking for cash flow, and Google has a ton of cash flow. I was looking to see here again. We are live and unedited. I just had an alert go off on Google. Google does pay a dividend, 0.3%. So it's a real small dividend. So he'll make money on that also. I think the big news for this week will be NVIDIA earnings on Wednesday after the close. They are expected again to just beat the quarter and kind of blow that out. I think the focus will be on, though, how Jensen answers the questions during the Q&A time for the call on the actual earnings call, because all this spending is just so crazy, and they're making all these investments in these other AI companies. And I think everybody wants to know, hey, is this bubble popping? Are all these investments actually going to be able to generate earnings like they're projecting and like they're talking about? So people are really going to be listening to what he has to say and how he answers those questions. But they'll probably beat as far as the quarter goes when it comes to their earnings. And that's Wednesday after the close. This morning I heard Fox Business, they were talking about David Bahnsen was on there, and he mentioned Lamar as one of his dividend picks. And so I thought I would just kind of go over Lamar real quickly. He likes Lamar. We like Lamar. We do have Lamar in some portfolios. It's a very conservative stock. It's not flashy. It's definitely not NVIDIA, but they do pay dividends, and they have strong cash flow from their dividends. So let's kind of just look at that real quickly. They're toward the highs of the year. Well, as far as their 52-week high, they are priced around They're down today. Let me I switch screens here. But Lamar is around 127, right under 128. So they're down a percent today. So everything's kind of going down. But they do pay their yield right now is 4.83%. They've got a 10-year growth rate on that dividend of 7.63%. That's according to Seeking Alpha data. And that's important. That's part of the dividend growth strategy is you're not just looking at the dividend, but you're looking at the growth of that dividend. So 7.63% growth on annualized average over the last 10 years. That's pretty good, especially with the current yield of around 4.8%. They did just have earnings, and they are projected to look pretty decent for 2026, 2025, the rest of 2025 into 2026. They've got a lot of digital billboards out there now. They're doing a lot of those upgrades. They do expect some recovery and ad spend also. So again, it's just a different mindset, right? Lamar is going to be, I would argue, much more predictable. They are going to show cash flow, and you can see that, and they're returning that back to shareholders in the form of a dividend. Again, that's what we like because it is predictable. It's a little boring, but it pays, right? And you can forecast your cash flow from companies like Lamar. This is not investment advice. This is for educational purposes only. But when you compare it to something like, a high-flying AI company right now with all these projected earnings, but actually all this projected growth with no earnings, it just brings a little more peace of mind if you're looking for steady cash flow, and especially cash flow that's growing. Like that's pretty cool. So that's an example of a dividend growth stock that was talked about on Fox Business this morning, and one that we like as well, especially depending upon your timeline and risk tolerance, and again, cash flow needs. So yeah, those are some of the highlights today, Monday, November 17th. I'll keep working on getting out here closer to lunchtime, but please check us out, fishcreekcapital.com. Please like and follow and let me know how I can help.